Starting to look for property and wondering if your mortgage loan application can be approved, you can actually use a method called DSR.
So what is DSR? DSR definition can be put simply as a method used by banks to calculate whether or not you can afford the loan that you are applying for.
Yep, this is how banks estimate how much you can afford to fork out for your mortgage monthly installment. This is a very important calculation for bankers who may be deciding whether or not to allow you to take on more debts. What's up everybody, welcome to VC. My name is Vincent.
And I'm Chloe. In our intro, we talked about what is DSR. So speaking about buying a house in Malaysia, your DSR should generally not exceed 70%. Some banks even require DSR or an even lower percentage, but that will be explained further down below. Thus, a good DSR should be within 50 or 70% range, and we would say that the lower this figure is, the better. A low DSR is attractive to a bank as it indicates that you will be able to pay your monthly installments on time and there is a lower risk of you for defaulting.
Yep, sometimes if your mortgage loan application is rejected not because of your income is too low, yet it is because of your commitment is too high. We do have a client that is T20, as known as top 20, that earns over 11,000 due to the high commitment of 2 car loans, 1 mortgage loan, credit card debt, personal loan, and remaining left only 2,008, while looking for a property that is worth over 1 million ringgit, which monthly repayment costs around like 4,000 ringgit at the point, which then his loan application was rejected.
As aforementioned, DSR is calculated based on the ratio between your commitment and your net income. Here's the formula of how you can calculate your own DSR. Simply take your net income, that is after your tax, EPF and SOCSO, divided by the total monthly commitments including your home loan that you are gonna apply for. From there, multiply with the figure 100% to receive your final DSR in percentage.
Yep, so once again, if you want to purchase a property in Malaysia, your DSR should not generally exceed 70%. Just keep it in 50 to 70 range lah. Yeah, of course, the lower it is, the better it is lah.
What exactly defines commitment? In the eyes of a bank, commitment is the debt that shows in your CCRIS, which is your credit score report. It includes your car loan, credit card bills, mortgage loan, personal loans, business loans, PTPTN, Aeon loans, and also ASB. Now, ASB is a bit special. If it's under 3 years, then it will be calculated as a commitment, while if it's over 3 years, then it will not be classified as a commitment anymore. So keep that in mind.
Yep, basically all monthly obligation and fixed expenses that make a payday much less fun for your financial. Also, do take note that a monthly commitment of your Astro, your Kuku water filter, Wi-Fi, electricity bill, water bill and all that thing do not classify as your commitment in the eye of the bank as they are not included in your CCRIS report. Now let's calculate your DSR together. Take out your piece of paper and a pen. We will wait for you preparing for that. Have you taken your paper yet? Now, if you're already prepared, perhaps you can give this video a like, and if you learned something so far, and we love you for that.
So you prepared your pen and paper, right? So do write down like a table, just like this. On your left is your income and on your right is gonna be your commitment. The column of your income, write down your gross income, which includes your basic salary and your fixed allowance. If you have additional commission from your job, please do take the total of the commission for the past 6 months, then divide it into 6.
Yep, different banks have different requirement on the commission rate as they are not stable. Some take 50%, some take 70%, some even take 100%. So let's take 50% as a conservative in the calculation.
Let's say your gross income is 5,000, including your basic salary, fixed allowance, and average of commission. Then deduct EPF of 450. Then deduct SOCSO of 20 ringgit, tax deduction of 400. Your monthly net income will be 4,000 and
130.
130.
Yep. So on your right hand side, you will have all of your commitments. For the sake of this calculation, let's say your car loan is around like 500 ringgit, no mortgage loan, no personal loan, PTPTN is around like 60 ringgit, no ASB, credit card is around like 1,000 ringgit. By the way, take note that the credit card will only take 5% of the total outstanding, so it will be around like 50 ringgit. So in this case, so your total commitments will be 610 ringgit.
For example, you're looking for a property that is 400,000. So the total loan amount is 360,000 and monthly installment will be around 1,450 ringgit. Simply use this formula to calculate your DSR.
Yep, with the total commitment of 610 plus 1,450 ringgit, and you will get 2,060 ringgit. Divide by your net income of 4,130 ringgit and times 100 to get a percentage of 49.9%. So it is kind of safe that you are quite safe to get approval from your loan. Of course, the lower the better lah.
If you are a commission earner, DSR calculation will be slightly different. The DSR requirement of commission earners in majority of the banks is 50%.
Yep.
Only Hong Leong Bank is accepting commission earners with 100% DSR rate, which simply means that if you are a property agent, insurance agent, or a salesperson with 100% commission base, that's the way to go. Also, you are required to provide 6 months of bank statement to show your average income rather than just 3 months of bank statement, like a salary earner does. So do keep that in mind too when you're preparing for your documents.
Yep. Now, after calculating how much your current DSR, let's calculate how much you can loan from the bank in the other formula. Simply take your net income times 70%, take the remaining to deduct all of your commitments as mentioned above. With the example provided of 4,130 ringgit net income times 70% and deduct commitments of 610 ringgit, you will get remain of 2,281 ringgit as your highest monthly mortgage repayment. Now take that 2,281 times the magic number of 255. You will get 581,400 ringgit. This will be the 90% loan you are able to get from the bank. Simply divide 581,400 ringgit by 90%. You will get 646,000. This is the highest property price you are able to purchase. Disclaimer that this magic number only works if you are taking 35 years mortgage loan with the interest of 3.1%, as this is a current average mortgage loan rate.
After all of the calculation, if your DSR is over 70%, how can you improve your DSR to get your mortgage loan approved? First of all, either reduce your debt or increase your net income. We would suggest clearing off your major debt in your profile.
Yep, you can simply look at the interest of the debt, which is the higher one. Then you can clear that off first if you have the capital to do so. Personal loan and credit card debt can go up to 18% per annum, which we will be highly recommend to clear that off first. Then car loan is around like 4% depending on the rate, and PTPTN is the lowest at around like 1% per annum. So I think it's better to clear off the higher interest one first lah. Yep, this is how you don't fall into the rabbit hole of paying tons of debt every single month, especially when the interest rate is tremendously high, like personal loan and credit card debt. Just clear that off first.
Other than clearing off your debts, having a higher income will also help you to improve your DSR. Whether you are starting a small business on the side, freelancing, or maybe just asking for a pay raise perhaps, and make sure that all of your side incomes is legit and contribute to your EPF regularly. And yes, you can self-contribute to your own EPF as well. Also, don't forget to pay your tax.
Yep, if you're doing side business and never paid tax for it, the bank will not classify the income to be legitimate. Please do keep that in mind. Lastly, in order to get your loan approved, the credit score will also make or break your loan application.
If you're having a clean profile, we highly suggest you to apply for a credit card and pay it off every single month to build up your credit score. This is because a person with zero credit history also means that zero credibility. Banks do not know how much they can trust you, as you don't have any financial record to show your trustworthiness on paying debts on time. On the flip side, if you do have any debts, please do pay it punctually so you won't have a bad credit score before applying for your home loan.
Now, if you want to know more about what kind of things that you need to prepare before applying for a mortgage loan, click the video up there to see what you should know beforehand.
There are many other factors that affect DSR, as different banks have different criteria.
Now, if you want to have a clear idea of what to expect from each individual banks, such as banks accepted DSR or maximum home loan that you are eligible for, do send us a message at VC.ESTATE.co/contact to get a free consultant from us. Yep, that's all from us today. Thank you for watching. I hope you learned something from today lah. And maybe give us a like perhaps, and consider subscribing as we post a lot of property related content in this channel. Join the VC family and we will see you in the next video. Ciao!